Between the slowdown and the shutdown, we're going to give you the lowdown. We have trader Chris Robinson joining us, market watchers Catherine Rooney, Vera, and Lee Munson. Lee, ended with you. What is dominating your thinking right now as you continue to trade? Do you look at the shutdown? Do you look at this drag on? Do you get hopeful when you hear they're going to at least do some vote in the Senate on Thursday? What do you think?
Well, I'm hopeful about a lot of things because I'm an investor, so I try to figure out how things could work. So the first thing is, remember, all this housing data, we already knew housing was going to be soft. It's already been soft. Right now, you can get a 30-year fixed at the price last spring. So it's about 0.5% lower. Once the shutdown comes, to fruition, that 20% lagging that we were just talking about, that's going to get done. Also, I don't really care about the International Monetary Fund bringing down global growth from 3.7 to 3.5. That's still a positive 3.5. My hope, and I know this sounds awful, I would love to see people panic a little more and maybe get the market to come down 2 or 3 more percent, because that's where I'm going to be a buyer. Fundamentally, where are the bank's bad earnings? It's not there. Housing soft. It's not a disaster. I say you can buy this weakness.
All right. Well, Catherine, in the meantime, the shutdown gets in the way of that. The shutdown gets in the way of closing home loans because the FHA, that backs a lot of these loans, is stymied. The SBA, a big lender to small, medium-sized businesses, that's stymied, so that's hurting those biz guys. Do you worry that a shutdown that most investors kind of properly in the beginning dismissed, maybe not so much now?
Neil, let's look at the numbers, just kind of very easy, back of the envelope, because when the audience hears economists say this is going to shave off X, Y, Z amount of points, it's quite a simple calculation. Just so everyone knows, 20% of GDP is government spending, of which 20% is unfunded right now. So it's a partial government shutdown. It does have an impact. By my own calculation, Neil, you will take 1 percentage point off of GDP if it lasts for the entirety of the year. So of course, the duration of the shutdown is going to be the main influencer of how much this affects GDP, because government spending is still a big portion of the GDP. As I said, 20%. So it is big. What I'm most scared about, Neil, is self-fulfilling prophecy. I liked your last guest's comments. I agree with him. I think that if this combination of negative forces continues to weigh on consumer sentiment and small business sentiment, then you can have the following happen. Self-fulfilling prophecy. Guys get scared. They say, I'm not going to buy that house. I'm not going to buy that car. And that slows down economic activity. So that's where I'm starting to really get cautious. The numbers are strong, and I do agree it's still an opportunity to buy because this market fall is based on fear.
All right. Chris, one of the things that people had been sort of getting ahead of themselves with is this market, the start of January, the January effect, whatever you want to call it, has been very strong. In fact, through the shutdown, we've had double-digit advances in all the major averages. So obviously they are looking at this, Chris, and saying, we can deal with this. Can you?
Oh, absolutely. I mean, this is where the rubber meets the road as far as risk management is. Right behind me, they trade a 1.7 million contracts of the E-mini every day. One contract covers $130,000 worth of stocks. So people don't necessarily have to be wondering, where is the bottom? How can I get out? This is why this place is here. Now, the stock market's closed, but the futures market's continuing to go. We'll trade all night long. And I don't think that, we had 17 days in a row where we rallied. We were up over 15%, close to 15%. So today we dropped 50 points in the S&P. That's not that big a percentage drop. We could drop further and still be okay. But I think that what people didn't like today was the news that we may have hit a bump in the trade negotiations with China, number one. And also you saw us turn lower after the housing information came out.
All right, real quickly, Lee Munson, another factor is China on again, off again talk that maybe the talks aren't going to happen, or that there might be a hissy fit between Washington and Beijing. I don't know where that stands, but it seems like the talks are on. People are optimistic a deal can be had. Are you?
I am optimistic. Here's the thing. We already know that China was soft last year. Its own economy was down over 20%, almost 30%. So this isn't really new news. The only policy thing I care about, the only thing I care about in the White House is a trade deal with China. You know what? Like my old friend Larry Kudlow, he's in there. I know he's a great negotiator. He's a great statesman. I know they're in the back room right now trying to figure out how can we get a deal with China and how can we make it look good to the U.S. People people. So I have a lot of confidence. We can't just put up a wall between trade and China. It's ridiculous. So, like I said, if this lasts a few more months, if this causes more uncertainty, it only gives me better prices to buy for my clients.
All right, we'll watch closely, guys, in the meantime.